Hey guys, in this video, I'm going to give you both a high-level and low-level breakdown of a newer all-in-one ETF for Canadians, FEQT. This has been marketed as a viable alternative to the usual 100% global equity exposure. Let's get under the hood, what's in it, how it behaves, what to love, and what to watch out for, and why I own it. Let's do this! Before we start, I want to thank you for liking and commenting on my last video. It really helped YouTube push it to a larger audience than normal and helped me to know that this is the kind of content that you enjoy. So here I am with a similar video. If you're new to the channel, welcome. I'm Mr. Financial with over 100,000 followers on Blossom Social. I'm into evidence-based investing using empirical data. If that's your vibe, hit that subscribe button and come along for the journey. Let's start with a high-level overview of Fidelity's FEQT. What exactly is it? FEQT is the Fidelity all-in-one equity ETF. It's not built like all the other all-in-ones in Canada though. In my last video, I went over how XEQT, a very popular all-in-one ETF in Canada, uses market cap-weighted indices from the US, Canada, developed markets, and emerging markets. FEQT has an asset allocation of 97% equities, or 97% exposure to stocks, and 3% crypto, Bitcoin specifically. Its exposure to the broad market indices is very different. Let me explain a little. Like the other all-in-one ETFs, FEQT is a fund of funds, meaning that it holds other Fidelity ETFs, giving it exposure to hundreds of stocks. It uses a strategic asset allocation approach. It invests primarily in underlying Fidelity ETFs that provide exposure to a diversified portfolio of global stocks. I'll go through them individually after this overview. FEQT holds 1,071 stocks in its underlying holdings. However, many of these are duplicates, which I'll address. It was launched in January of 2022, so it has nearly a 4-year track record. It has $3.1 billion in net assets. It automatically rebalances annually. It trades on the CBOE in CAD or Canadian dollars. And it has an annual distribution of 0.76% by TTM, or trailing 12 months. FEQT has an MER, or management expense ratio, of 0.43% and is considered medium risk, looking at it through the lens of volatility. All this information is found right on the main page of FEQT. This is really basic and requires no digging, but that's not enough to make a decision as to whether an ETF belongs in your portfolio or not. So let's now look under the hood and do a low-level deep dive on how this ETF is constructed. I cannot emphasize enough how different this is from other all-in-one ETFs. So I mentioned FEQT is a fund of funds. It holds 13 factor-based ETFs and 1 Bitcoin ETF. For those of you not familiar with factors, factor investing is a systematic investment approach that selects stocks or bonds based on specific research-backed characteristics called factors that have historically delivered higher returns, or we can say lower risk over long periods of time. These factors are measurable attributes such as valuation, profitability, momentum, volatility, size. Rather than relying on market timing or subjective decision-making in the moment, factor investing applies these rules consistently and in a disciplined manner. I like the sports analogy that Fidelity uses to explain factors. They say it's like building a sports team. Traditional index investing is like picking the most popular players, index funds, or drafting a few star athletes, individual stocks. Factor investing, on the other hand, is like using data and player statistics to choose players based on specific measurable traits such as speed, strength, consistency that have historically led to their Performance. I'll be dedicating a whole video to this topic in the future. So FEQT's 14 underlying ETFs can be divided into 3 groups: US, Canadian, and international, plus the global small cap fund and Bitcoin ETF. For the US, they are FCUV, Fidelity US Value ETF, FCMO, Fidelity US Momentum ETF, FCUQ, Fidelity Quality ETF, FCUL, Fidelity Low Volatility ETF. For the Canadian holdings, they are FCCV, Fidelity Canadian Value ETF, FCCM, Fidelity Canadian Momentum ETF, FCCQ, Fidelity Canadian Quality ETF, and FCCL, Fidelity Canadian Low Volatility ETF. And lastly, for the international market, it follows the same pattern: FCIV, Fidelity International Value ETF, FCIM, Fidelity International Momentum ETF, FCIQ, Fidelity International Quality ETF, and FCIL, Fidelity International Low Volatility ETF. Then there's the 2 outliers in FCGS, Fidelity Global Small Cap Opportunities Fund, the only active fund in the group, and FBTB, Fidelity Advantage Bitcoin ETF. It's those ETFs that give FEQT exposure to 1,071 investments in aggregate. This is where things get interesting though. Each geography has potential for overlap. For example, let's look at the top 10 holdings of VCCV, VCCL, VCCQ, and VCCM. You'll notice some names like Royal Bank, Toronto Dominion Bank, Barrick Mining Corp, and Agnico Eagle are in almost every top 10. If you're to filter through all the holdings of these ETFs, many stocks are held in at least 2 of them, with some in all 4 ETFs. Some, of course, are in just 1. This means the fund may not be as diversified as you think and is not actually holding 1,071 different stocks as the underlying holdings suggest. That's because a stock may fit the rules for multiple factor-based ETFs. A stock can have the characteristics of value, momentum, quality, and low volatility all at the exact same time. As of the latest ETF facts, the total number of investments in FEQT are 687. The discussion on diversification is a big one, and we will not do a comparison to see its effective number of stocks. Even with this concentration, FEQT is still a very well diversified global fund. It uses a blended benchmark of 23.6% S&P TSX Composite Index, 47.3% Russell 1000 Index, 23.6% MSCI EA FE Index, 2.5% MSCI All Country World Small Cap Index, and 3% Fidelity Bitcoin Index. You will have noticed no direct exposure to the emerging markets. That and the 3% allocation to Bitcoin are also a differentiating feature of FEQT. This increases its volatility and risk profile at the same time. It also has a high home country bias despite Canada's 3% weighting in the MSCI ACWI IMI Index. This is the same for all the other all-in-ones. Many studies have been done on what is an appropriate level of home country bias and the pros and cons of it, but that's for another video. Of course, the world market indices do not all appreciate and depreciate at the same time equally. So this is where the automatic rebalancing of an all-in-one fund comes in handy. According to the disclosures, if the portfolio deviates by its neutral mix by greater than 5% between annual rebalances, the portfolio will also be rebalanced. In the case of a Fidelity all-in-one ETF's allocation to cryptocurrency, which FEQT has, if the portfolio weight exceeds twice its neutral weight, the allocation will be brought back to its neutral weight, with any proceeds being reallocated to the other underlying Fidelity ETFs at their approximate strategic allocations. This rebalancing and factor-based ETFs that have a higher turnover rate comes at a cost. I know we already spoke of the MER being 0.43%. This is already more than twice the average for all-in-one funds. There is another expense one needs to think about when buying an ETF. It's TER, or trading expense ratio. FEQT has a TER of 0.08%, bringing the total cost of the fund to 0.51%. That is a very expensive total expense. Others like XEQT come in at 0.21%. Those 30 basis points compound over the years. This increases the risk of this ETF over its competitors that use completely passive indices. So with this target weighting, what is the country mix or geography of FEQT? It is, of course, heaviest in the US at 48%, and Canada next at 25%, both slightly above their target weights currently. Then comes the EAFE countries of Japan at 6.5%, UK at 4.2%, and France at 2.6%. FEQT has a balanced sector exposure with all its factors leaning towards more value stocks. This is what it looks like at present. Financials are number one at 21%. Then comes technology at 17.4%, and industrials at 11.8% to round out the top three. It is important to note that the real estate exposure is quite high at 4.3% compared to the MSCI ACWI IMI index. This brings us to the style of FEQT, which we have already kind of hit on when speaking about the factor mix. FEQT is a blended large cap fund leaning heavily towards value. It's 30% large cap blended, 26% large cap value, with only 18% in large cap growth. It also has a reasonable mix of mid and small cap exposures, with a little less than the other benchmarks. Looking specifically at market cap or capitalization as a percentage of the fund, FEQT is balanced between giant and large caps at 36 and 35% respectively. The benchmark index is a lot more giant cap at 44%. Other all-in-ones also mirror the index, of course, even with the heavy home country bias. Now let's talk a little bit about performance, baby. Don't get too excited about its performance though, since the fund has been around for less than 4 years. Unfortunately, I wasn't able to run a proper backtest with Portfolio Visualizer since FCMO was only showing data from January 2025. Too bad, so sad. I wish I could have squeezed an extra year out of it. At least we have the most recent data from Fidelity, which is as of November 30th, 2025. Since inception, FEQT has a 16.63% average annual return by market price. Its 1 year is healthy at 16.7%, and its 3-year returns are ridiculous at 21.1%. That's some substantial outperformance compared to an MSCI ACWI IMI index. Now let's look a little deeper into its factor exposure. The obvious thing is it should be balanced between value, quality, momentum, and low volatility at 23.6% each. Changing the lens slightly, the aggregate Morningstar factor profile of FEQT over the last 3 years is looking not as balanced as one might assume. It tilts towards value as expected. It's even higher on the momentum side. Quality comes in below the category average, which is surprising to me. Where FEQT really shines is in the volatility and liquidity measures, both being low. We'll see how that pays dividends later. Included in that total return number mentioned earlier is a small 0.76% trailing 12-month distribution yield, in spite of its tilt towards high yield, which comes likely from the value factor ETFs. FEQT is 97% exposed to stocks and 3% Bitcoin, so it hasn't gone up in a straight line as the numbers may suggest. Its worst drawdown since inception is 12.32%. Again, that's what a medium risk, 97% equities, 3% Bitcoin ETF can do. The goal of all these factor exposures is to lower, not eliminate the volatility. So this still is a roller coaster with its ups and downs. This brings us to the risk profile of FEQT. Risk is an important factor to consider when selecting ETFs for your portfolio. If you haven't done so, you may want to go through a risk tolerance and capacity questionnaire. It'll help you to know your asset allocation and how much risk may be best for your personal situation. In any case, don't gloss over this part. So I mentioned Fidelity has this fund labeled as medium risk by volatility. And as we see in the price chart, it can still have some big drawdowns in this short history it has. Let's look at some risk metrics using Morningstar's portfolio risk score. Morningstar rates this as an aggressive fund on that dial. It has a high return compared to its category with the same amount of risk. The beta is 0.90, meaning when the index moves, say 10 up, this will move 90% or 9. The beta can be a little misleading though, so I'll circle back to that in just a second. It has a high R squared, meaning its beta is pretty strongly correlated to its benchmark. Its Sharpe ratio is 1.59, the higher the better, showing a very good return for its risk. And its standard deviation is 9.83, much below the category average. Now back to its beta. When it comes to beta, or how much a stock's price can swing up and down, it's good to get the full picture. Here you can see FEQT's beta capture ratios. It captures 95% of the upside, which isn't great. It would be awesome to see that as close to 100 as possible. But compared to the downside capture, it was only 68%, which is amazing. The fund over the last 3 years is doing what it's supposed to do with its factor exposures. It is protecting the downside in a huge way. And we really saw that in the April 12% drawdown. Now that beta of 0.9 is seen in its full context. And lastly, let's look at the price to earnings ratio of FEQT to get an idea of value here. It is currently sitting at 16.9. In comparison to the total US market, which is sitting at 21.6, FEQT is reasonable. Again, this is what having a factor tilt to value, low volatility, and quality should give you. For a quick review, FEQT is an all-in-one ETF by Fidelity with 97% exposure to stocks through 13 ETFs and 3% exposure to Bitcoin through one ETF. It has 687 underlying stocks to be exact. Its market allocation is 23.6% to Canada, 47.3% to the US, 23.6% to international developed markets, and 2.5% to small cap global opportunities. Fees are always an important consideration, and FEQT is expensive compared to its competitors, but reasonable considering you're paying 0.51% for a global factor-based portfolio that rebalances itself and has a 3% Bitcoin allocation. This begs the question, who may want to look into this fund? Well, it may fit someone who is looking for an all-in-one solution with crypto exposure and no fixed income or emerging market exposure. It, like other asset allocation ETFs in general, gives investors a way to build a whole portfolio in one simple ticker. There's diversification across the global market, and it's continually monitored and rebalanced at least annually, meaning no work on the investor's end. Now listen up, guys. I mentioned this in my deep dive on XEQT, and this is even more important for FEQT. It is 97% stocks and 3% Bitcoin, a very volatile, speculative asset without cash flow potential. That increases the risk profile of the fund. It has higher volatility and larger drawdowns than a more balanced asset allocation portfolio of, say, 60-40. 60% stocks, 40% bonds. FEQT also uses 12 smart beta or factor ETFs with the goal of smoothing out returns over the years. This also makes way for underperformance compared to its benchmark, which is a risk of not meeting your financial goals in the future. FEQT is not immune to global market crashes, even with its factor tilts. The MSCI ACWI index has experienced over 50% drawdowns in the past. This makes it not suitable for someone who scores lower on the risk tolerance scale. And FEQT has overexposure to Canada, a clear home country bias. With all of that being said, in my opinion, FEQT is great for long-term investors. We're talking 10 years or more. It's great for passive investors who want exposure to quality, value, momentum, and low volatility factors. Global diversification without emerging markets exposure. Investors comfortable with or can tolerate exposure to 97% stocks and 3% Bitcoin. And lastly, as a core holding to build a portfolio off of and combine with other ETFs, or even as a standalone portfolio. That's why they call them all-in-ones after all. Let's not ignore the other side too. In my opinion, FEQT may not be for you if you are a conservative investor. You can't handle the wild swings of the stock market and crypto markets. It may not be for you if you want global market cap weighted indexing. It may not be for you if you like to have the lowest possible fees. And if you don't want a home country bias. I personally hold FEQT as a counterbalance to XEQT. The goal is to tilt my portfolio towards value, low volatility, and quality characteristics. You can check out my full portfolio breakdown right here if you're interested. So that's my full breakdown of Fidelity's FEQT, the only factor-based, all-in-one equity portfolio with exposure to Bitcoin. There are many excellent all-in-one ETFs in Canada that you could check out, like VEQT, ZEQT, and TEQT. I'll be doing a deep dive on the remaining 5 ETFs I own over the coming months. If you're new to investing and want to know the basics of covered call ETFs, you should check out this video right here. See you there.